Hey everyone, me Kevin here. In this video, I'm going to talk about my thoughts on AMC and GME. I'm going to talk about why these stocks are falling in the after hours. I'm also going to provide you my perspective on these particular stocks, and I'm going to provide you with exactly what my position is related to these two stocks in the stock market. I'll give you screenshots and I'll actually just pull up my Weeple and show it to you. But for now, let's go ahead and see what the heck is going on. We'll keep this nice and concise. And if you like that, make sure to hit that like button. All right, so check this out. AMC is down 2.15% in after hours, down 0.9% on the day. AMC has obviously run up substantially from some of the lows that we had at the end of July and the middle of August, which is great. We've had a very nice recovery. We are heading back to sort of bouncing off of that 50.85 level we've worked at plenty of times before, but we are nicely above that 41.75 level right now, which is excellent for AMC. We jump on over to GME. First thing is, I do have much less technical analysis on GME. I'm going to talk a little bit more about fundamentals on GME, but we see a little bit of a curvature here to the downside following a run at the end of August. We ran at the end of August from around that mid 160s range all the way up to a high of $231 per share, and presently we're sitting at about $198 a share. We are slightly down in the day, and we've also fallen in after hours. In fact, if we look at the after hours, we're all the way down to 181. It's almost like we're going back to that mid 160s range with an 8.7% decline. So what happened today? Well, two things happened today. First thing is AMC. AMC announced or released on Fox News this really incredible, really emotional piece of artwork, a TV commercial, and very enticing TV commercial campaign with Nicole Kidman, who I can't believe is over 50 years old. It was just incredible. But anyway, she is a star in this commercial, and this commercial really, you got to watch it. It entices you to go to the movie theaters. Like when you watch it, you feel the emotion of the movies beginning to play, and like the beginning of a movie, all that hope and anticipation of when that movie starts and everybody goes quiet and the lights turn out. It's great. They did a phenomenal job on their TV commercial. This was announced on Fox. There were some tweets also of some securities attorneys trying to threaten Fox, suggesting that Fox might get sued for helping promote the MOAS, or mother of all short squeezes, suggesting that there's no fundamental basis for a MOAS, and therefore, because Fox is promoting the MOAS, Fox might be exposed to potential litigation for promoting a short squeeze where there might not otherwise be a short squeeze, which I thought was really unsavory. I thought it was very, very wrong that securities attorneys would come out against the AMC movement, because we have to remember that short squeeze aside, AMC and GME represent a movement. It's kind of like, in my opinion, Black Lives Matter. And I'm not trying to get political here. It's just they each represent something, right? See, think about it this way. Black Lives Matter represents social inequality and decades of making it harder for, just for example, black folks to build wealth through owning real estate because of redlining or just straight up discrimination, blockbusting in real estate. The fact that people couldn't get loans or that home values in black communities were lower, right? So Black Lives Matter represents a movement finding a solution for these inequalities, right? In my opinion, the AMC GME momentum movement, the short squeeze movement, the Ape Nation movement represents a frustration over the suits and a lack of transparency around short interest data. Why is it that Ortex has their data here, and then S3 Partners has their data here, and then the truth is somewhere else, but nobody seems to know except the hedge funds and the suits, and the suits are the same kinds of people who are like, oh, how dare you, Fox, looking out for the little guy. Well, screw you, suits. Charles Payne and some of the folks at Fox have been the most open to this ape movement ever, compared to anyone else out there, the exception of CNBC. But I will only mention CNBC because I kind of feel like they're playing catch up to Fox. Like they're like, oh man, Charles Payne is doing such a good job here, and the other folks over at Fox are doing such a good job on Fox Biz. CNBC is playing a little bit catch up. But anyway, point is, you gotta respect the AMC movement and the GME movement, the Ape Nation. You gotta respect it. It represents much more than the underlying stocks. And that's why I actually increased my exposure to AMC. And I'll show you exactly how I did that in just a moment. But for now, let's focus on AMC and GME. So AMC, incredible TV commercial, incredible rumors about potential partnerships or talks or advertising talks with GameStop, and excitement over what is to come. Adam Aron had an excellent interview on Fox Business today. I was very impressed with him. Now we have to see, will this new marketing effort, this $25 million AMC marketing effort, will that translate into revenue? That's what matters. Now remember, Adam Aron says we've got about $2 billion in cash or credit lines. I expect that most of that is credit line, and that's generally because it makes more sense to have your high interest rate credit lines paid down than just to have a lot of cash sitting around. But yeah, look, we've got cash equivalents at AMC, and this enables us to advertise and get Nicole Kidman. I mean, what an honor. What an honor to see movie theaters like AMC now advertising themselves rather than just movies themselves, right? It used to be, and Adam Aron mentioned this, it used to be that TV commercials would just advertise the movie and then go look at it in AMC, right? This whole commercial, you got to watch it. I'll link it down below. The whole commercial is all about see a movie in AMC because it's a theater and it's a full experience. You got to enjoy it. It's excellent. It's awesome. So now that's AMC. Let's touch on GME, and I'm going to show you some shares and some things that I'm doing. All right, GME. We got some talking to do about this one. So it bothers me a little bit that they're not doing Q&A sessions in the earnings calls. The reason for that is, as someone who is a real estate investor and negotiator, specifically a negotiator when it comes to real estate, you know, we don't really negotiate with stocks, right? We like to think we do, but we generally don't. I negotiate a lot in real estate. And in my opinion, the Q&A session is the most important to understanding what's really going on. I want to see people on the hot seat, under pressure, responding to questions. This is why I think all politicians should always be forced and compelled to debate. Because I want to see a leader under pressure. I don't want to see somebody falter in the face of fake news. I don't want to see someone give up in the face of FUD. I want the truth. And I want that reaction from people. And so I'm a little bit disappointed that there's no Q&A session in the earnings calls. It bothers me. Now, I'm obviously bullish on the movement that AMC and GME represent. But I'm not so excited about some of the details in the earnings call today. I'm going to give you the good and then the bad from what we have, which is very, very limited, because the good that we have, well, I'm going to go through that. But the potential for bad is very, very limited because we got a very catered outline. No forecasts and no Q&A. Let's talk about some of the good. So the first thing that's worth mentioning is that year-over-year sales are up substantially. They're up 25.6%, where we just crossed $1 billion in revenues at GME. We're at $1.183 billion compared to $942 in 2020 in the second quarter. Now, I personally am not super jazzed about that second quarter reading. Why? Because the second quarter represents April, May, and June. Okay, April, May, and June, we were just barely getting our first stimulus check. People hadn't gotten their PPP money yet. People hadn't gotten their EIDL money yet. The markets were not flush with as much money just yet. April, May, June of 2020. I think real consumer spending started coming back in the third and fourth quarter. In other words, this 25.6% revenue growth is good. The net sales growth is good, but I am worried we are comparing year over year to a big hole. Now, I know a lot of people during the pandemic and the lockdowns spent more money on video games, but then you also had the problem of a lot of GameStop stores potentially being locked down, especially in California, where they weren't open anyway and people were buying their video games online. So I really think you're comparing to a whole, comparing to Q2 2020. Now we'll see. At least it's up. I mean, up 25.6%. That is good. I have my reservations, but that is good. Now, the CEO of GameStop does mention that they were able to achieve this despite a 9% reduction in stores due to the pandemic. This sounds good again, but in my opinion also relates to this comparison back to a whole. Yes, GameStop is consolidating its stores. Now, with this 25.6% growth, I also thought it was interesting that the CEO mentioned, by the way, we believe, quote, net sales is how people should evaluate us. In other words, assess the stock. Well, yeah, because that is also one of the best metrics that you have right now. The big tell to me is how are we doing quarter to quarter? I'm gonna pull that up for you right now. Folks, take a look at this, okay? These are just the numbers. This is not me trying to be a bear or a bull. It's just looking at the numbers, okay? Net sales for the first quarter of 2021 was actually higher. Net sales of 2021 were $1.276 billion. We came in at 1.83. That, folks, is a quarter-over-quarter decline, which we did not hear mentioned. Divided by 1276, that is a decline of about 7%. That's a quarter-over-quarter decline of 7%. And you have to pull up the Q1 earnings release to actually see this because they don't give you the comparison in this quarterly report. And they didn't have Q&A, right? Then, when we look at SG&A, let's go ahead and do the math here. So SG&A here sat at 378 divided by 1183. That works out to about 32%. And in the quarter over here, Q1, SG&A worked out to 370 divided by 1276, worked out to 29%. So you had a 2% increase quarter over quarter in SG&A and a 7% reduction in sales quarter over quarter. That's not good. You have a softening in quarter over quarter sales. But the CEO doesn't mention that. The CEO mentions, hey, we're up 25.6% compared year over year. That's despite a 9% reduction in same-store sales, and our SG&A is doing better compared to the second quarter of last year. Okay, like, I want AMC, I'm sorry, I want GM, well, I want both of them. I want both of them to win and succeed. But here's what I ask. Be real with us. Be real with us. Like, look, if I got bad news, and you know this, if you watch this channel, you know this about me. If I got bad news, you know I will tell you. I'm not gonna lie to you. I'm not gonna deceive you. I'm not gonna tell you something's green and crystals when it's actually garbage and moldy grossness. I'm gonna be blunt with you. So I don't like those things. And we're picking these things out because these are specifically things that the CEO cheered. Now, the good news is clear. GME doesn't have debt. No debt, no borrowings. They've got a little bit of debt. They got a small term loan with the French government. It's like a pandemic relief loan. So most people don't really consider that, even though technically it is debt. Most people don't consider it. They spent $28.2 million on CapEx. They're making investments into this. They gave no guidance. We know this, but we've got $1.775 billion on hand. Cash. They did this by selling 5 million shares at the money or at the market, right? They've got a lot more money than they had last year, $1 billion more. They lost less money than they've lost in previous quarters, which is good. They're at 642 stores, which is still a very sizable company. Strengthened their balance sheet a lot. They leased a new customer care facility in Pembroke Pines, Florida, which is actually 5 minutes away from where I used to live in Florida. They're hiring talent for customer care there. I personally think the focus should be a little bit different. For example, if I were on this board, I'd be pushing for things like, what can we do to partner with companies like Corsair to sell gaming PCs, memory cards, chips, become the Best Buy of gaming? What can I do to partner in innovative ways with other businesses where I can sell games where the people are? Like, how can I partner with Dave & Buster's, for example, to have a GameStop kiosk? So that way, while people are sitting there eating, taking a break, and they're having fun playing games, they're like, hey, we should take home a Nintendo Switch and Super Mario Brothers or whatever. Like, bring the games to where the people are, right? Partner with sports betting firms like DraftKings, whatever. Look, it's great that we've got a 500,000 square foot fulfillment facility opening up next year in Nevada, and that the York, Pennsylvania facility is already starting to ship products. This is good. We're playing catch up with Amazon. It needs to be done. This is bare minimum. This is good. It's bare minimum though. I want the vision. The problem is right now we're not getting the vision. Now, a lot of vision is expected to come from Ryan Cohen, who's the chairman of GameStop. He's not the CEO. He's the chairman of the GameStop board. He also was the co-founder and CEO of Chewy. Now, he's no longer at Chewy, which is partially good because Chewy has not had the best year so far. Their last earnings was a big oopsies, which is not good. He did step down to spend more time with family, so that has nothing to do with him. There's a separation. I just want to make that clear because some people think that he still works at Chewy. And it's just worth disconnecting those things. He's just focused on well, I would imagine family, and GameStop, which is great. And the CEO mentions that, hey, look, we're in the process of bringing in new innovative products. Some of the things they mention, and I imagine Ryan Cohen has a lot to do with what's happening here. They mention more focus on products, collectibles, and electronics. I'm really hopeful that electronics are things like PC gaming equipment. I hope by collectibles, they mean NFTs, which remember, there's a website. GameStop made a whole NFT website splash page teasing NFTs coming. So I'm really hopeful that they've got big things brewing, because there's not much to love in the fundamentals right now. What we need for GameStop is hope, like some vision. And we're not getting that right now, and I think that frustrates the stock market because the stock market is impatient. I'm not suggesting people sell, but why is the stock down? It's because people like hope in the stock market. With the hopium leads stocks to go up. And I'm such a big fan and proponent of the movement. I really want to see GameStop and GameStop and AMC succeed. Now, I did promise you that I would show you my position in at least AMC. That is because I don't have shares in GameStop. I do not own anything in GameStop, but I do own shares in AMC. And I promised you I would hold AMC shares for at least a year. This is my Weeble. Scroll to the AMC section. So what you could see here on screen, right about, let's see here. So here, where my finger is, these are the shares I have. I have 2,100 shares. I sold a covered call for $55 to get a $24,500 credit. I sold that last month sometime. So I just have to make sure, like, if AMC goes over 55, that I get rid of that contract so I don't get called out, right? But this is just a way of lowering my cost basis. See, it cost me, I don't know exactly how much it cost me. I think that's market value. Yeah, that's market value. It cost me probably, somewhere, well, I'm up, whatever, $80 or $40 or whatever it is. So it cost me somewhere around $97,000 to buy these shares. If this option expires worthless, it basically reduces my cost basis by about 25%, which is really awesome, right? Here's another thing, though, that lowers my cost basis right here and actually increases my exposure to AMC, is I sold puts between now and January of 2023, which forced me to buy 2,000 AMC shares, which would be like doubling my position in AMC if AMC sells for under $40. By January of 2023. So I'm making that commitment that AMC is going to be above 40 for the long run. Now, I could be wrong, then I'd be forced to buy the shares, right? So I'm playing options on both sides here, milking credits. I really particularly liked this one right here. The reason I like this one a lot is because 2,000 shares at $40 would cost me $80,000, and I got a $41,000 800 credit, which is crazy. That's a little bit more than 50%. So anyway, this gives you a little bit of perspective into my thoughts, AMC, GME, everything that's going on. If you found this helpful, make sure to subscribe. Thank you so much for watching, and folks, we'll see you in the next one. Bye.